Welcome to Trading Lounge and the US indices for Friday, August the 6th, and starting with the S&P on the weekly chart. As you know, we're in wave 3, from wave 2 here to wave 3. Once that's completed, we'll go wave 4 and wave 5, and this will be quite a serious top up here around the 5,000 area, 5 being the second strongest number. So the market's definitely going to be stalling there for quite some time, and probably going sideways across this level here for, I'd say, a good couple of, I think you'd be thinking of, think of years rather than months in this, and that would also be above and below that level in a very large correction. But we'll get to that when we get to that. What we're looking for at the moment, as you may know, we're looking, this is the length of wave 1 here. And we want wave 3 to be longer than wave 1, and we're not there yet for that. So even that would just be equality. Really, I'd be putting wave 3 up here, but I just want to be conservative, and I've also got 2 counts here that we'll look at on the daily chart. And we need, of course, to tie it into not only the Nasdaq, but also the equities as well. In all of this, they all need to tie in together to a certain degree at least. Of course, there are leaders and there are followers, and tops don't always end as one would expect them to end. So it just depends on where the weight is in the market. Anyway, apart from waffling on, let's cruise in to smaller time frames and check on things. So 2 things here is that I've got one wave 3 up here, and then the other wave 3 is down here. And this other wave 3 that I've got here, they're the same degree of structure, of intermediate degree, but this is really where the Nasdaq one is at the moment. So yeah, but you know, I've been harping on about that, so we don't need to go over that too much. So we've got between minor wave 4 and minor wave 5 to make intermediate wave 3, and then we're looking for 5 waves of minute degree with inside of that. This blue one, 1 and 2 and 3 and 4 and 5. And then between 2 and 3 here of minute degree, we've got minuet 1, 2, 3, 4, 5, and this is where the Nasdaq can top out on this one here. So we just need to be a little bit mindful of that. And the trading levels is that from 4,000, which is a medium level, to 5,000 here, we've got the minor levels in between that. So we've got 1, 2, and 3 that make up group 1, and we've got that tested support on group 1. And once we achieve that, we can set our target to the next level, which is 5, and then 8. And these are just the Fibonacci numbers as a price ratio: 1, 2, 3, 5, and 8. We can also bring in group 2 here. So between minuet 2 and 3 here, we're also looking for 5 waves. So let's go in and move in on that. And yeah, setting up quite nicely for long trades, as you can see here. Like the Nasdaq snaking across the 15,000, we're seeing the S&P snake across the 400 here. And yeah, it's just sort of popping its head up now and waking up. So we'll see this push up now. We've got a few trades also in this side here. I'll just pop the stop under here. And one thing that we can also understand here, to Richard Wyckoff's work, the movement across, this sideways movement across here, is the accumulation phase, and we'll be going into the distribution phase. So that's the juice, so to speak, to push that up further. So this is certainly the time to to move into these. And once again, we talked about the top of group 1 before in the daily chart. We can also do it from 400 here. So from 400 to 500 here, we can do our counting again. So it's just 1, 2, 3, 5, and 8, and that's all you really need to know. So, but in this case, we can see that we're at 4, 4, 2, 9 here. So the 30 here, just roughly, that would be the top of group 1. So the next step above the 4, 4 here is to find the top of group 1 here as the tested support, because once we get the number 3 here, as I call it, it is 30. I understand that it could be 300, but whatever it is, the number 3, I just call it. Once that becomes the tested support, then you can forget about the market coming back to this number here. it gets pulled up to the next level, which would be 5, the second strongest number. So let's just go into the tick chart. So it's all pretty sort of simple from here on in. We don't really need to do much here. Let me just, this is my tick chart, which is always a bit messy, so bear with. So we've got wave 2 here with wave 1 up here and wave 2 here. And so we're really, like I mentioned before, we're going into the third of the third. So we should see this move across, move along here quite strongly. So we'll see how that plays out. Didn't pull back to its 61.8% at that point. So because it didn't pull back to its, wave 2 didn't pull back to its 61.8%, it's telling me that the market is quite strong at this point. But yeah, so we have other long trades in from before over here, but we also want to build in. We've got another one just in here on the tick chart, one here. A bit late now, but you should have got one here, as I've pointed out before, all through group 1. This is the time to build into trades, and also again as well up here. Now you'll get the classic trading levels pattern. So let's just look at this. This is obviously quite big, but the arrival, the reaction, the first high above the level, the ABC, and then getting support over here on the level. So if this is the top of group 1 here, then basically the market's migrating from being resistance to support, and that's what you're looking for. So with that in mind, we can see that we're just arriving here. We've had the reaction, so we'll be getting the first high above the level, and then we'll get an ABC correction from that, and then push up. So that will be the setup here. So you just don't buy at the top, you wait for those highs to come into play there. And if you take a close look here, you can see 1 and 2 here. So this will be the third wave here, and a fourth and a fifth wave here, then an ABC pattern here as well. Yeah, so you can see them here. That's nice setup here, nice setup here. This one will be a little bit bigger and wilder here as well, because we've got the end of the market, the end of the session, and we'll have the beginning of the session, and then of course we'll have the futures market too, which that's got its own world basically as well. So that's that. So once support is gleaned on the top of subgroup 1 here of 30, right, which will take a little bit of fluffing around. Keep your stop well out of the way, like under the, at least down between, until that 30 becomes support here, you really want to keep the stop. The closest I would put it here would be something, because the market, because if there's 5 waves up here and it needs to come down, it can come down to the 15 area here. So you want to keep it below that. So keeping it just below here, right, under the 10, because if we just take it, let's just take it from here to, let's take it up to 35, then you'll see the 61.8% is here. So this market could pull back into that space before moving off again. So you don't want to get flicked out. So that's why we've got our stop under, we've got under this level here. You could bring it up a little bit further. Being Friday as well, we're looking for Friday, Monday to be bullish in our bullish weekly cycle. That's something that I've just sort of dreamt up over the years, but when it plays out well. Let's move along to the next market. So just quickly on the Russell here, we've been looking at this as wave 3 here, with a corrective move to wave 4 here, and then we're looking at wave 1 and 2 here, moving up to 3, 4, 5 to get wave 3 here, and then we've got wave 4 at that point. So let's go into the, let's just go into the hourly chart here. Let's check on this little area here. Let's just scroll this back out. That needs to move over here probably. I'll just double check on that. So we can go long here. The market's already moved here, sorry about that. But anyway, we'll go to the tick chart, because this little move up here is in, you can see that it's in 5 waves. Well, we can see 1 and 2 here, and we can see the third wave here. There still may be the fourth and the fifth. It's a little bit tricky to see. But once again, also 2 here, we've got, what's this here? That's 230 here. So that's important because that's the top of group 1 of 200 here. So 10, 20 and 30 make up group 1. I won't put the lines in there, but that's the top of group 1 there, 30. So you really want that as support, and that will pull back as well. So we'll need to go quickly to the tick chart here. Well, from the low here, we've got 1, 2, 3, 4, 5 for 1 and 2 here, then 1 and 2 and 3 and 4 for 5 for the third wave. I think we're still building, actually. I thought we might have one. I thought all this may have been the third, but 1 and 2. This could also be 1 and 2 here because this fifth wave is longer than the third wave. The important thing to take away here, though, is that this length here is what it is. That's the first measure. Then this one's expanding on that, and then this one's expanding on that again. So what we're actually seeing here is we're seeing the range in the Elliott structure increasing to the upside. But also as well, we should just be if that is. I'm always conservative, so I would just naturally look at those 5 waves there and then expect a retracement back to this area here, which is really this block here. That's where the supply is at that point, just so you know that, because markets will mirror each other, each side of the trend. So yeah, it can pull back down here. It doesn't have to pull back down here, so you might need to be careful. That may be the A wave, that might be the B wave, we might see a C wave just come down to the top of that area here and then push up from that point. So what you're looking for, this is where the levels come in. So if we highlight this one here a little bit more, let's just give that a bit more definition and then bring in here as 10, 20 and 30 here. So we could call this the top here, so we can go long above that top there if you're not already in there. Because if that's 5 waves there and it's not finished, well then that will just continue up and keep building here. But if it is the 5 wave structure here, well then it's just simply going to drop here shortly and will probably come down to here or something like that and then push up. And it can come down here as well. But if you're thinking to buy down here, be mindful of that. So yeah, but the good news is that we have 5 waves here now. So that's telling us that after a correction, the market will head up again. Alrighty, I'll leave that. So all good on that front. And this is the Nasdaq here. So yeah, this is where the top of the wave 3 can end here for this one here, and this is that 3 that I had on the S&P 500. So yeah, we need to be careful. I'll need to give this some thought, and we can all ponder it. However, between minute wave 4 and minute wave 5, we've got 5 waves of minuet degree here, and in between 2 and 3 here, we're looking for 5 waves. So we've got 1 and 2 here, and we're in the process of the third. There'll be the 4th and the 5th here, and then there'll be this one, and then there'll be this one. Now this one could be stretched up a little bit further. There's different things that we could do to look at the length of this, so might need just a little bit of a hand here to get that right there. Just there's different ways of doing this, of course. So that third wave can take us all the way up here. So that's quite a difference, isn't it? But I'll put that there, put a little line there, that will just remind me. But I always find it better to count the waves. So we'll just count the waves. So based on that, I think that we may have, you can keep the stop under the 15,000 here now. And also too, with group 1 here from 15,000, group 1 is the important one here. So we can look at that as 300, which will be up here somewhere. So that's the top of minor group 1. So that will be significant, because once we get support on that, we know the market won't be pulled back to the 15,000 at that point. So between 15,000 and 16,000, we can go 1, 2, and 3, and then 5, and then 8. And with 8, we bring in group 2. Let's just check on this a little bit further here. So this is the hourly chart here. I'm recording the whole little screen now, so you'll be able to see what the code is, the time frame here, and so on, you know, and see the date better here as well. So yeah, look, you know, as I've been harping on about all week, once this is ready to go, it should be good, and yeah, it's doing exactly what we would like it to do, so that's all good. And we're just working through group 1 here now. And the idea with group 1, because when you think about two big numbers, it's like sort of getting on the bus at one stop and getting off at the next stop, you know. So you're really just, you know, trading from one large number to the next large number. I mean, in this case here, it's a little bit odd. 15,000 is the medium level, and the next largest number in the scale of the trading levels is 16,500. That carries the same weight as the 15 here. So, and between that, we've got all the minor levels here, and I'll treat 16 as a minor level as well. So the idea is, if you're going from one stop to the next stop of one large number, and it could be, you know, $100 to $200, or $1 to $2, or 10 cents to 20 cents, and all those sort of things. So the idea is that is to build in the beginning of the trend, isn't it? So now that we've got support here, we want to build in at the beginning. So we want to try and get one at 15,000 at the right time if we can, or close to it, and then on top of 100, 200, and 300. So you need to, you know, have 3 or 4 trades in here, and then we know that at 5 is the second strongest number. The 15,000 is not that important, it's the 500 in this case. So there'll be a classic trading levels pattern there. So you will know that when we come up to here, there's a really high probability that we're going to be having a correction across here. So you could either take the money off the table in full or in part, or leave it and buy the pullback, or buy the setup of the classic trading levels pattern sitting on that level. It gives you a thing, and then you know, that's kind of if we're looking from 15 to 16, well then let's just assume that the 500 is the halfway mark. So you could add to the position if you wanted to around this area here, but when we get up higher here, this is when you start taking money off the table, you know, just like basic portfolio management, you know. Okay, so I don't know if we need to go to the tick chart, but we'll just have a quick look. So we have been building in here, as you know. So just really waiting for things to become support. This one over here, we can just wait for that classic trading levels pattern there, and then also up here as well, if you wanted to build in. And the idea is just to keep moving the stop up. Once the number 2 becomes the support, we've got the stop here at the moment. We can have it under here. Depending on, like when I go into these smaller time frames, then if I put a green signal on a daily chart, well then we're trading the daily longer term trend and all the rest of it. But if I'm going on to the hourly, that will be the hourly one, and this will be the intraday one. So you can play a tighter game as you come in on the intraday. So now we know that that's the support here. So that before it wasn't the support, that was testing as the support. But once it makes, you see how it's come up here and tested it, and then it's made new highs here and leaving, well then you can use that as the stop. And the same here as well. Once that becomes the support, you can use it as the stop. And once that becomes the support, you can use it as the stop. And then this one as well. So that's, so you know, decreasing the risk, but also technically putting it in the right place at the right time. And if it's too much exposure for you, well then you've got too much money in the market. you'll need to check your initial risk and get all that working for you. I think Ryan Jones does quite a nice job with his money management in terms of contracts. So that might be something to look at, because new traders, you know, the fundamental traders and technical traders, the only thing they agree on really is the money management side, and technical traders are much better at that, I feel, than fundamental traders. But and new traders tend to learn money management last, you know, when really need to learn that first. So let's go and have a look at some stocks now. So we've got Amazon. So we've got wave 3 here and wave 4 here, and we're going up for wave 5. I've got this as wave 1 and 2 here and 1 and 2 here. I'm a little bit unsure about this being wave 1 and 2 here, but I feel like it's the best fit. Otherwise, I'd have to call it as wave B here. It's difficult to call this wave 1 and 2 and then 3 and 4 and 5 here. If this was in 3 waves up here, then we could look at an ending diagonal triangle and work it that way, you know, but to fit in with the rest of the market, so to speak. But I just don't know if that's going to be the case. So I'm unsure about it. But this ABC pattern here is pulled back to its 61.8%. Well, just a tad lower. It can come for that. But let's go into the tick chart, and I think we should be going long here now. Let me just bring this in. I know I've been waffling around with this for a little bit. So wave 1 here with an A wave, a B wave, and the C wave down here, because that basically just fell out of bed here. I was looking at it as 1 and 2 here, and then 1 and 2 here, and then down for 3, 4, and 5 here. There's a nice 5 waves in this little move here. That would make wave 3. So I was looking for wave 4 to pull back. That can pull back. Let's get rid of that. Can pull back to this level here. So we may just get this. If you go long here, you might need to be able to hold on to this, because we may just go to here in 3 waves, an A and a B and a C, and then have one more move down and then move up from that point. So that's the tricky bit there. So maybe just trade less and we'll keep the stop out of the way. The market is bullish, so we're not going to have any problems here really. And what I just don't want to miss out on this, because this could just be a series of wave 1 here and back for 2, and then 1 and 2, and then cruising up here. So if you're up for it, and you like Amazon or whatever, you know, then just go long above that high there. But that's what could happen at that point. And if that does happen, you know, if you do half a trade here and then pick up the other half here, and then fine, because if that pushes up here, then it's all the way up here, and we've missed out a bit, you know. So yeah, so it's possible now that the wave 5, that won't even be in there. That would be over there at that point. That would be under there. So yeah, I'll put that, move that. I'll put that there. It's a bit of a long shot, and it's a bit of a gamble, but an educated risk in that, well, the rest of the market's pushing up. But, you know, when we looked at the Russell, those 5 waves up, well, it may need to pull back, and the S&P may need to pull back in that regard as well before pushing up. So that may give us that this is the thing that may cause it, you know. Yeah, so anyway, as long as you're aware of the situation and the risks that you're taking. The other thing here too is you want to be adding above the, well, that wave 4 is above the 34 there anyway, so you definitely want to be looking to add above the 35 here as well. But there'll be a classic trading levels pattern here that you could work. It will work together in the next session. Okay, that's Amazon, a little bit of a tricky one. Alphabet's moving off nicely now. We were looking for wave 2 to pull back, and it's cruising along, so you can put in another trade here. We've got a few trades down here. Once that top comes off, once we move up past that top there, then we can move our stop up to the next level as well. Currently from 2.5, which is the medium level, up to the major level 3 here. We've got group 2 here. So the 8 here, so 5 and 8, and then we've got group 2, which is 65 and 72. So the market's in that, normally holds in there, and this is a good positive sign. So we should see that just continue to cruise up. It runs a pretty tight range, that market, so that's should be pretty safe. And Facebook here, as I've mentioned many times, that we're just going to be above and below the 150, the medium level here for quite some time, but we should see it start to push up. Now, I won't go into the intraday on this, but we should see it start to follow this trend up here, because on the tick chart, we've been counting this up as 1 and 2 and 1 and 2 and here and 1. So it's ready to push up into this space. Yeah, so I'll leave that with you, but it's still further to move up here. We still need that wave 5 to come in up through here. So yeah, the idea was that we're going to look for the trade back at this level here, but this is a classic trading levels pattern: the arrival, the reaction, the first high above the level, the ABC pattern. We can purchase back here, or basically we just need to purchase, you know, if that's one, this is that side. We want to be on this side here, and then we also want to be from the high to the low here. We want to be in this area. This is the side we want to build in on. So I'll leave that for the time being. And Square has made its move again up through here. We knew that this move back through here was corrective because it's on lower volume. But we've got wave 3 here with an A and a B and a C here for wave 4. And yeah, just looking for this to cruise up. We've got one position below the level and one position above the level. We've done all the right things. We've put the stop there. You could probably put the stop in here, move it up into this. In fact, we will do that now. We'll bring it up into here. And yeah, we're going to take a percentage at the 300 area through here, and we'll try and suck a little bit more out of it above the level there. When we get up here, I'll go back over this. We can go back over this together and just check that we got this right here. But being from wave 2 to wave 3 here in blue, the minute structure here, we are seeing that third wave personality, which means that it's strong. We're seeing the ranges in this. We know that Jack has bought that, an Australian company, Afterpay. So, a bit of excitement and all that there. So that's suiting that. And Facebook here. I must have called it Apple Facebook before. Sorry about that. Yeah, so yeah, everything's going quite well here. We're lifting off this area through here now. That's what we were looking for. So let's just go into the tick chart on this one, just so get my headspace back around it. Okay, so we've been working from wave 1 down to wave 2. We were patient. We've got a position here, a position here. So it does appear that I was looking at this too as wave 1 and 2 here. I don't know if I can put wave 2 over there. I'm not quite sure. There could be another little wave in here for that. I'm not. Oh, that could be. No, that's it. No. So yeah. Anyway, I've got to get my head around that a little bit. But besides that, we've got 1 and 2 and 3 and 4 and 5 for 3 and 4, and then 1 and 2 and 3 and 4 and going up for wave 5. So we're going to see a pullback over here for this. So we're going to keep the stop out of the way. But if that's the case, you can look to, depending on the A, the B, and the C wave, if that's kind of easy to work with. See this one here, we've got the A wave, the B wave, and the C wave. We can go long above the B wave top here. So that would be going long above the B wave top here. And sometimes if it's just a short B wave, it's quite good because you can take the top there and bring that through there and look to go long over here on that as well. So let me just clean, that's the bottom of group 2, so I don't need that. Yeah, so I'm just going to bang heads with group 2 here. So from 5 to 8 here. Then we've got 65, 72, and 80. So we'll be entering group 2. I mean, I always just put the shell of group 2 there because 65, 72, and the 80. But there's a lot of other very important numbers in there. So this is just the skeleton of it. We can talk about this later. But this, you know, like 70 is important. 75 is important. 373, the top of group 1, that will be important. So yeah, between 70 and 80, you'll have the numbers running again: 1, 2, 3, 5, and 8. So you're going into, you know, the next level down, next fractal down besides that. So anyway, we're going over here for wave 3. So we should have a nice run through here. Yeah, so that's that. And Tesla, we've got a bearish count and a bullish count for this. The bearish count brings us up to here, brings us down to wave 4 here. And the bullish count obviously takes us further up here. I've got a position in this myself, but I still don't know what I'm going to do with it. But I still know that there's further to go up here as well for this. As I mentioned last time, this is a little wave 4 here. So we've got a series of 2 of them to go here. If you want to get out of this, well then around the 750 would be a nice move there. Anywhere from 730 to 750 you could exit at that point. And of course we can just copy that and I'll just start working a stop there as well for that. Because I just wanted to see where the rest of the market was there, and I just wanted to see also, yeah, where the Nasdaq is and all these sorts of things. You know, I don't want to get out too early. I don't want to get out too late. I'll just try to find a balanced view on it, so I won't be too happy or too sad. Yeah. So yeah, that's that, and that's something else, so we don't need to worry about that. So thanks for tuning in. Enjoy the weekend. Cheers.